another credit that I think people are more aware of, at least, they may not know the details of it, which you're going to help us with, but it's really talking about like these research and development tax credits. Like in my mind, when I'm talking about research and development, if I'm like a business owner, I'm like, well, I don't do any research. Like, I don't develop any products or I don't keep track of it, you
Right.
know? So what do we do here?
Yeah, that is not an uncommon statement there. I'll go into places that I know they're doing R&D, and I just lied there because I don't go into our clients anymore. When we started 15 years ago, I would go in.
Right.
Now I'm just the talking head. I just go out and talk about it. But we will go into clients that they say I don't do R&D, and sometimes they're right. They don't.
Right.
Um, but it's not as complex as it sounds like just by the name. It probably should be called new or improved process credit rather than R&D credit. So, do I have processes? Every company has a process. Now that has to have technology involved in it. So it's not just, how are we moving paper around in the office? Maybe there's a process to that, but it's probably not an R&D process. And so to qualify for R&D, and before I tell you that, most common users, manufacturers, software developers, architects, engineering companies, even the construction industry potentially can qualify. It's iffier, but I've seen credits in that. Those are common industries for the credit. So if you're in one of those, you should be looking at it to see if you qualify. But anybody that meets a four-part test that is defined in IRS code, and we can go really deep and say code section 41, the IRS code, it says I qualify for the R&D tax credit if I meet this four-part test. First being, do I have a business component, which says, do I have a new or improved product or process? But it goes further. Do I have a new or improved, and improves key, new or improved product, process, technique, formula, invention, or software? One of those are the business components they specifically call out. Then number two, you have to have technology involved with what you're doing. So, engineering, computer science, material sciences, biology, chemistry, not like a marketing science or a management technique, anything like that. Some kind of hard science involved, which again, that's pretty straightforward. Looking at, you know, Melissa, you may do some software development internally for your business to help manage something. That's a technology, computer science you're doing. Those two are straightforward. The next two are the meat of the four-part test. I have to have uncertainty. And the uncertainty doesn't have to be, and that's a little nebulous. What's uncertainty mean? It doesn't have to be, can I even do this? It doesn't have to be, is it possible? It doesn't have to be, can I develop a time machine? That level of uncertainty. It can be, can I do something better, faster, cheaper, more efficient, less operations, less waste, less weight, reduce shipping costs, whatever it is. I'm doing something different. Even if I have an existing product, I just want to be more efficient with that product. That's enough uncertainty. And then if there's uncertainty, the fourth part ties in experimentation, which is, evaluating different alternatives to see if we can come up with a solution to whatever the problem is that we have come up with. And experimentation is, conceptual idea. Hey, I have an idea. I want to do this. Or I got an order. We need to now figure out how we're going to manufacture this. To design, to testing, to prototyping, to CAD work, to evaluating, going through that multiple times. Experimentation is the timeline we quantify for the credit. But bottom line is, new improved product or process, technology involved, uncertainty, not ultimate, just some level of uncertainty, and experimentation. A lot of businesses have projects that incorporate all four of those. If so, they need to look at quantifying that for a credit.
But Randy, I mean, like we're post pandemic. Like you and I are only meeting virtually. Like,
Mm-hmm.
isn't everybody essentially having to double down on technology and figure out how to do this business stuff
Yep.
in this way? Like, don't you think there's a lot more opportunity now that people are just by way of transitioning their business to a post COVID like business economy, which I really think is where we are,
Yep.
is isn't that a lot of, I mean, because that's a lot of technology. Like, would I qualify? Do you think it's easier to qualify for some of these
I
credits now?
I think it is. I think you'll see a lot more of it. I think you've been watching my webinars because I've been saying that. So thank you for paying attention. Um, um, but but yes, not just purchasing technology though. You have to be
Okay.
doing something. You right now you can have an accounting system, you can have a CRM system, you can have a I don't think you're shipping a lot, but a shipping system. You can have all these systems already that you bought these technology packages. Now you want them to all work together. You want it to work with your Zoom now too. You want to work with your Teams. You want to whatever. Now you're developing some modules internally to get all these technology packages that you purchased to work together seamlessly. That integration can qualify for the credit. So I see that for sure. One thing I want to point out, and I like using my bar as an example. Now, when I just did the 4-part test there, you're not thinking, oh yeah, a bar is going to qualify for an R&D tax credit. Well, what you just said, when we were shut down, the liquor store already had an online store. It started blowing up. We started
Mhm.
shipping around the country. We already were. We had to make this online store more robust. A lot
Right.
of software development internally that we did just on the software to do the sales. But then we had to integrate with the POS system. We had to integrate with the shipping system, the online system, even FedEx. FedEx did this same day delivery. They came to us and said, "Hey, we want to start doing this, and we want you to be the guinea pig, and so we're going to do 2 windows of same day delivery of your product within a 60-mile radius." Now we had to tie into their software as well, and so all that software development created an R&D tax credit for a liquor store that you never would have thought would have had an R&D tax credit. So you are exactly right.
No, and I think that it is going to change everything because we are having to, I tell business owners every day, I was like, everything, every way that you do business right now is continuing to change. Like, I know you pivoted for the pandemic, but like, continue, keep that
Mhm.
pivot hat
Right.
on,
Yes.
because we're going to continue to change. Like, we've been talking a lot. I've been talking with other businesses about building communities. Well, building communities, you can do them on other people's platforms or you can do them on your own platforms.
Hmm.
Well, people are trying to reinvent these ways that we communicated pre-pandemic. And I think that a lot of people are putting, I mean, I've bought an app. I had to buy this, other website. I had to buy this other stuff and put it together. But I think what you're saying is I would still need to put that together. So then if I offered like a valuation training program or something,
So,
or would it have to be like a product, like like a valuation calculator or
So when we're
something?
talking software, it's going to be more the platform behind the scenes that's running something. So let's
Okay.
say that you bought an app, but I'm going to give you 2 examples. Here,
Yeah, yeah,
you
yeah.
you bought an app. All right, great. They had to do programming for your app, right? You may have an R&D tax credit for that if you took on the risk of that programming. If you bought an app and they said,
Okay.
"Hey, Melissa, we're gonna charge you $10,000 and we're gonna put this app together for you," you really didn't take a risk on because you have a flat fee of $10,000, and now they don't get paid unless they deliver you this app that works.
Sure.
If if the app company came to you and said, "Melissa, we're going to develop this app for you, and there's some complexities here because we have this valuation software we want to build it and everything, and we're not sure how this is going to work exactly. So you're going to pay us $200 an hour until we get this working, or if we can't get it working, you still paying us $200 an hour." In that
Mhm.
scenario, you took on the risk because if this fails, you are the one that's hurt by it. You're paying to try to do this. There's uncertainty there. And so even if we're outsourcing somebody to put some software together for us, you could take a credit in that
Okay.
scenario.
Okay.
And I don't remember the other thing I was going to say. So,
Well, but that's helpful because I think that everybody's getting it. So we talked about how to qualify again
yep.
for this credit. How do we quantify? Is it just all the expenses that we pay, like every dollar that we can find, or is there a better way to go about it?
Yeah, that's man, you are really good at this hosting stuff. You're just taking us right in the right paths. I'm going to have you on the Unique CPA as well, but I won't be as good a host as you, obviously. Let's go down that
And
path.
I would be uniquely not a CPA, so that would even be the more fun.
Well, there you go. The unique non CPA. So
Right.
that's what we'll do. But valuation, I mean, that's huge in public accounting. So I would love to talk about that. All right, we digress. Let's go into quantifying the R&D tax credit. This one is not as straightforward as ERC because, ERC is, hey, I have an employee, I paid them, boom. And there was some complexity on ERC I didn't get into if you're a large employer, small employer, but we don't have time for that unless we want to go 4 hours. I mean, if you want to go 4 hours today, I'll do it. But,
Right.
all right. So R&D tax credits then. We look at that experimentation timeline, idea to manufacturing or to, running a software and all the expenses in the middle there. It's 4 things we can take into account. Salaries and wages. So like the ERC, it's based on salaries, but no limitation. If we pay somebody, we get to take whatever percentage of their time times their W-2 is their expense for this. So it's salaries and wages, it's outsourcing, in our app scenario, you outsource development. Okay, if that qualifies, we get to take that into account as well. If we're in a manufacturing setting or even this is a fun one, craft brewery setting where they're using supplies. If they're consuming supplies in the development process or in the prototype process, we can take those material costs into the credit. And the 4th one, which we see but not a lot, is rental of computer time, which we see now because of cloud computing services that are used for R&D. So we look at those 4 expenses on all the projects for that year, not the project start and stop, but what happened during the year. If that's, let's say, $1 million of expenses, and for a $10 million manufacturer, $1 million of R&D expenses is probably normal, probably even low. And so in that scenario, the credit is about 10% of those costs. And so in that scenario, $1 million of cost, $100,000 credit. And again, this one's not like ERC. It's not a refund. It is, I have to offset taxes. And so we take that $100,000 and we reduce our income tax bill by $100,000. Or if we're a startup business, which startup businesses are defined as businesses that are 5 years or less, pretty much is the rule. And our current revenue is less than 5 million. If we have that scenario, it is almost refundable because we can use it to offset payroll taxes. So if we are paying anybody, we can use it to offset payroll taxes and get the money back that way. So that's the how you quantify. That's how you use it, and that's the quick course in R&D tax credits.
Well, I'm thinking under your scenario, either a microbrewery or a winery. Like we would maybe have to research what type of wine we want to make. So we would have to consume all of that product.
Oh, I thought you were saying you and I have to go research if their wine was any good. So we have to go out there. They can pay us to taste their wine, and that's part of the testing process. Yeah, in craft brewery or winery, which there's the wine trail not far from you in Southern Illinois, right? So there's some wineries down there. And craft breweries are, St. Louis is big craft brewery town as well.
Yeah.
And so, in fact, I won't say who, but we've done a handful of R&D tax credits in your town. So breweries, every time they have a new formulation, there's probably R&D. Anytime they're doing a seasonal beer, a one-off beer, a test batch, that's all involves R&D. And the interesting thing about breweries, only because you brought it up, and I already brought up beer like 5 times already, so I guess I brought it up, but because we talk breweries, their credits can grow significantly with all the, the water, the hops, the grains, the yeast that go into all those test batches. All those 4 ingredients can now become part of the credit, and that can be a significant cost when they're doing test batches. So the breweries in general have had bigger credits the last 5 or 6 years because this rule kind of changed 5 or 6 years ago. And so it's been a fun industry for us to work with as well.
Now, the only other thing that I think that people are actively doing now, post pandemic, is creating like training packages and becoming like more, leadership training or whatever, teaching a skill, things like that. And a lot of that is online. A lot of that is like, are you seeing people like that being able to get it because they're kind of pulling together? But it's still, I don't know if they have the what did you say, the risk.
Right. Well, the risk would be an issue, and we'd have to look at it. We just analyze projects, see if they took on the risk. If they did, they
Okay.
did. If they didn't, they didn't. But what more so it is, creating the training program itself, the content and whatever tests and all that. That alone, no, because there's not technical uncertainty in that. But if we're creating the platform to run it on, the
Gotcha.
software platform, and we've seen plenty of training companies where we have taken credits for that platform development.
Yeah.
That's really the key aspect of it.
Okay. Okay. So, in general, if somebody's like, I think I may have some of these credits, they would go to, somebody like you, and you would look at all of the different business credit options and kind of look and see what. Now, should they expect this from their regular CPA? Like, should their because I don't think I always see that anybody's doing in-depth consulting, like if you just hire somebody to do your personal tax return or your company tax return, and they're not getting really deep into anything else, are they going to find these credits, or do you have to go out and kind of seek them?
So it's a great question, and it's why we exist, because these are really complex part of the tax code. And I am a CPA. I was a generalist. I was in public accounting. I was doing every, tax returns from whatever, a brewery to a manufacturer to a software, all these industries. But as a generalist, as your normal CPA, they just can't become an expert in R&D or ERC or cost or all these things that I work with. And so because of that, we work with CPAs. That's where our business comes from.
Yeah.
We support CPAs. We are not a competitor with a CPA firm by any means. And so that's our whole thing. So CPAs in general, and I say CPAs somewhat generically because you got EAs, you got tax preparers. I
Sure,
mean, I'm
sure.
a CPA, so I take pride in that. So I say CPA.
You're a
But
unique CPA.
that's right. I used to be called the wacky accountant, so I'm glad that
You
one's gone.
moved up.
Yeah, exactly. Went from the wacky accountant to the unique CPA. It's a little more sophisticated. So
Yes.
that was just my family would call me that and friends. I've never told anybody that.
It's all public now.
You can edit that out, right?
Of course, sure we will.
Wink, wink. All right. Yeah. So we support the CPAs. Part of my fun is I just educate on this stuff, and hopefully that comes across that I enjoy it as we're talking today, because I do. And so I've probably, I do. I don't even know 30 education, whether it's a webinar or conference. Well, no, you count the podcast, that's more, but that's all CPAs who are my audience, and that's who
Yeah.
I talk to, and I want them. My goal is that a CPA learns enough when they listen to me that they can identify an opportunity. They're not going to be
Sure.
able to be an expert. They're not going to quantify it, document. They're not going to do any of that, but identify, because as a CPA, that's what you need to know. You can't, I mean, if you stack the tax code, page by page, you'd be, reaching the moon or something. That's crazy. And so you can't know everything, but you can know it exists. And that's my whole goal. So if somebody's CPA is not bringing this to them, that's not out of the ordinary.
Right.
The CPAs that we work with, obviously, we're constantly educating, and hopefully they're able to identify and then bring this to them.
And that